Have you ever received an IRS letter or a tax notice in the mail? If you haven't, then you're lucky. If you have, you're wondering, well, why do I receive this letter? Why am I late on paying this, right? It's not uncommon. A lot of times, IRS sent you the tax letters because you're late on certain dates, certain payments. For today, I'm going to show you the 7 deadlines that business owners should know when it comes to accounting and taxes so that you do not receive IRS letters and you pay taxes on time or even save a lot more money in taxes. And if you have your pen and paper and your calendar with you, let's get started. Before I talk about the 7 dates, I'm going to teach you some very simple concepts. Number 1, tax extension versus tax filing deadline. Just because you file a tax extension doesn't mean that you do not have to file taxes. Tax extension means that you are sending the IRS a notice asking the IRS to extend your tax return filing timeline by 6 months. For example, if the tax deadline is April 15, with the tax extension that you or your accountant filed, that means that you have 6 more months to file taxes. Knowing this concept is very important because a lot of times people get confused. They file the extension, but they think they actually file taxes. In the end, they forget to just file and pay taxes. That's the first concept. Second concept is the extension of time to file doesn't mean that you can get the extension to pay. The IRS want you to pay them money every 2 weeks, every month, every quarter, depending on if you're an employee or if you are the business owner. Essentially, let's just say for calendar year end December 2025, so that if you have a business, that would mean that you would have to pay quarterly estimated taxes during the quarters, during the year of 2025. You cannot wait. I mean, you can wait until after December 25 to pay taxes, but then you would accumulate penalty and interest on late payment. So it's very important to know you need to pay taxes gradually during the year, not waiting until tax time to file taxes if you don't want to pay penalty and interest. Next, I'm going to talk about quarterly tax estimates. I just mentioned to you that the IRS wanted to collect money quarterly or monthly or bi-weekly depending on if you're an employee or if you're owning a business. If you're an employee and you get a W-2 salary from your employer, taxes have already been withheld from your paycheck every 2 weeks. So let's just say if you make $100,000 a year and you get paid $5,000 every 2 weeks, that means that you only take home $4,000 because $1,000 has already been taken out from your paycheck by the IRS. Now, if you own a business, that's very different because if you own a business that you don't pay yourself W-2 income, or even if you pay yourself W-2 income and an S-Corp owner, you're still responsible for paying the IRS at least quarterly. What that means, every quarter, there are 4 different deadlines for the quarterly estimate tax payments. Every quarter, you're supposed to send some money to the IRS so that you're not charged with late payment, penalty, and interest. There are 2 different methods to assess how much money you would owe quarterly. Method number 1, you would look at your tax bill that you paid last year. Let's just say this is 2025, you look at your tax bill that you paid in 2024 and try to pay at least 100% of last year's bill. So let's just say you owe $100,000 last year in 2024. For this year, you would want to pay the IRS $25,000 per quarter. So it's $100,000, right, total for the whole year so that you don't get charged with late payment, penalty, and interest. If you make over a certain amount in income, then you're supposed to pay 110% of the previous year's taxes. I'll talk more about that in a later video, but just to know, the first method is 100% of the previous year's taxes. The second method is you would have to have your books, meaning your P&L and your balance sheet ready. If you have a good bookkeeping system in place, you should know your numbers, meaning that you should know how much money you make in profits in the business. And every single quarter, you would have your quarterly estimated profit, and then you multiply the profits by your effective tax rate to come up with a quarterly tax estimate you should send to the IRS. Let's just say this quarter, you estimate that you would make around $100,000 in profit, and your effective tax rate is 25%. Then $25,000 should be sent to the IRS. You could either mail a check to the IRS or go to the IRS portal to submit a payment. So this is what you've been waiting for, the 7 important dates. The first important date would be January 15. So January 15 is generally the date when you would have to pay for the quarterly estimated taxes for Q4 of the previous year, or the whole full amount of taxes that you owe for the previous year should be paid to the IRS by January 15. That's contrary to the belief that April 15, which should be the deadline, right? No, January 15 is the deadline. If you do not want to owe a lot of penalty and interest for late payment, remember January 15. The next date would be January 31st, which is the second important deadline. January 31st is the date when you are supposed to issue the 1099 or W-2 forms to your contractors and employees. If you forget to issue these forms to your people, they're gonna at risk of late filings for their taxes, and you're gonna be at risk of late issuance of these forms, meaning that you'll be charged penalty and interest for not doing this the right way. The third deadline is March 15th. So March 15 is the date when S-Corporation and partnerships and certain kind of trusts should file for their tax returns or file an extension for the tax return. This deadline is important because if S-Corps, partnerships, or certain kind of trusts, if they're not filing the extension or filing a tax return by this date, they would be charged late filing penalty around $300 per K1, per shareholder of the entity. So it's very important to remember this date. The next deadline, which everybody knows, is April 15. April 15 is a date that individuals, meaning even if you're a W-2 employee or if you're a business owner, but you also have to file your personal taxes, April 15 is the absolute date that you should file your personal tax return. If you do not want to file your tax return by April 15, then you definitely need to file an extension to file. So that extension would grant you another 6 months to file your taxes. It's also a deadline for C-Corps and certain trusts to file taxes as well. Remember, I told you previously that the extension of time to file not going to be the extension of time to pay. So you still need to pay your taxes by its due date. April 15 is also a date that you're supposed to pay for Q1 estimated taxes for that year. For example, April 15th of 2025 should be the date for business owner to pay for quarterly one, Q1 of 2025 estimated taxes to the IRS. And remember that I told you how to pay, how to calculate that amount in the previous point. The next important date, which is the fourth date, is June 15. So June 15 of 2025 is the date to pay for Q2 2025 estimated taxes. Next, September 15 is the date for S-corporations, partnerships, certain trusts completely file the tax returns. Remember that we had the extension date, the extension of time to file allows these entities 6 months to file taxes, and this is the final date here. You cannot extend anymore. I've had business owners that come to me and say, oh, I'm going to do another extension. No, you cannot. You have only one chance to do the extension, which is March with the deadline to file the extension. September is the deadline to actually file taxes for these entities. September 15 is also the date to pay for quarterly taxes for Q3 of that year. The last and final deadline, December 31st. So December 31st is the time when most firms on cash basis of accounting would close their books. After December 31st, you cannot do anything else to reduce your taxes, right? A lot of expenses, a lot of write-offs, a lot of things that you want to do to reduce your taxes will need to happen before this time, December 31st. I should say if you want to buy a car, you want to prepay for the whole year's worth of ClickUps or Zapier's expenses for the next year. Let's say you want to use some creative tax strategies to reduce your taxes. All these would need to happen before December 31st. This is the most important date of the whole year because it allows you to close out your books, talk to your accountants, do some final year-end planning strategies so that you could reduce your taxes or pay off your tax bill for that year. I know that currently we're making this video in November, which is very close to December. If you want to schedule any last-minute strategy sessions with us, it's time to do so because after December 31st, we cannot do anything to help you. I'm going to recap what I've talked about. The difference between tax filings and tax extension, about how to estimate your quarterly estimate tax payments, and the 7 most important deadlines that business owners need to follow in order to be in compliance and avoid penalty and interest from the IRS. So I hope that this is very helpful for you. If you like this video and like me to make more videos like this, click a like button and give me a thumbs up. And if you would like to get the calendar, the checklist of these important deadlines and how to use them appropriately, comment below and I'll send you the checklist. Thank you for watching.